Thanks all for joining today. I'm Joy Bays, the marketing manager here at Innovia, and we'll be moderating our webinar today. And joining me is Breon Jennings and Angela Dorn. And Breon is one of our senior application consultants and will be presenting today. Before I kick it off to Breon, I want to just call out the Q&A box at the bottom of your screen. If you do have any questions, please feel free to put them there. And then I will be unmuting everyone as we want to make this more of an interactive webinar. So with that, I will hand it off to you, Breon.
Thank you, Joy. Hi, everyone. So yes, uh, this is a interactive session. Everyone's going to be able to talk out of it when people are talking and discussing, learning from each other. I can tell you how to do it, but you guys talking about your experiences, things that you've done would be more helpful for you and helps us all grow. Say this is more of a discussion, not a presentation. With that being said, we're talking about month and year end process from a Business Central perspective. This is me before I grew hair and stress of a kid, but I've been here for going on 6 years now, loving it, growing and developing and helping you guys become better when it comes to all your processes and implementing BC. So we're going to talk about just the month end task, the month end process, right? So for you guys, anybody can help me tell me some of the things they do other than these tasks here. So right here we have doing AR, AP, reconciling inventory, updating posting date ranges, and monthly recurring journal entries. What kind of journal entries do you guys do on a monthly month basis that you just know off the top of your head? Can anybody give me one? And if you're talking, you're on mute. I can't hear.
Prepaid expenses.
Okay, yep. So you have some expenses that you have put in there, right? And you have it recurring phones, bill, travel expenses, things of that nature. Anybody else have anything?
Payroll accruals.
Yes, it's a big one, right? That's what I was expecting to hear. Payroll, you have to hit the payroll. I had one customer in the past, they had geo tracking on their trucks. So when it came to certain expenses there, they track that and print reports off of that to make sure things were where they're supposed to be. So when it comes to fixed assets, maybe their depreciation, things of that nature. So yeah, thank you, Pam. Yes, payroll, Cruz and Jeanette, thank you for the other one for your general expenses.
So there are ones that I set up into the future for the entire length of whatever the service or the situation is. So for instance, I do my depreciation at one time, but I have it relieve every month. So I minimize my standard journal entries that are having the same amount month in and month out. So when we look at my prepaids or accruals, I will also do that for the longevity of an invoice to minimize the monthly activity. It's easier to export it out in Excel, multiply it, enter it 12 times and change the dates on it than to do it on a monthly basis. That's just one of the tricks that I do.
And Pam, that's a good point. So with that being said, there's things you can do in the system, deferrals, right? So when you do a deferral, you tell how much time frame, and it'll do just that for you. It'll split over the time frame and it'll post it to that period, right? So you can have those deferrals there. You can have or standard templates or reoccurring templates. That way you can have that because you're right. You don't want to have to re-import that and remember what you did every month, right? It's just a pain in the butt.
So I don't use deferrals because it doesn't give me the information on the description line that I want to have. So
Yes.
that's my limiting factor of why I don't use them.
Yes. Have you, then there's also recurring, when you do a recurring, it might require you to post, right? But you can have it there. There's these, what we call text variables. And what a text variable is that you tell the system, hey, always put the current month, right? So that way you're not inputting something that is generic in itself, like the account number. No, you want to know this is January's expenses, right? So you would do something like %6 expenses, and it will always spit out the current month for the based off the posting date. So that's something like that. So I would love to see what kind of descriptions you have, Pam, because that could be something that even trying to see if there's text variable for that to help use the system and utilize this the things in it to give you a little bit more description. Now, granted, it still might not be enough, right? But just those little odds and ends that help you because you're right. I don't want to input the same thing over and over again. I can forget. You know what I mean? So I love that you're doing that.
One thing I do is I just started using deferrals this year, and I found that in the general ledger, I can go and I can edit the description after it is posted.
You can. That is true. I
So
I just found
that's what
some
I've
people.
done.
Now, how painful is that for you? I'm going to call you Pamela because
Yep.
you have two Pams now.
You
So
know, it's not that bad. I just make it as a part of my monthly entry, and I just kind of pull those up and see what they are, and I just do my F8 going all the way down so that it
yeah.
just repeats it.
Yeah, for me, so like that's kind of what I was talking about in the beginning. For me, as the consultant side of it, I'm like, yeah, just rewrite it, right? But for some, based off of the size, it may be too cumbersome or too painful, right? For you, it sounds like
Correct.
it's perfect because you can just filter everything down, update what you need to do, and that way you're utilizing the system deferral. Because what I don't want to happen is you guys go on vacation, right? You guys have want to trek Europe, right? And someone forgets that one step. Yes, can we correct it? Absolutely. But for your reporting purposes and decision making, you want to have that there already.
So when you're saying that you edit the description, do you have to do that every month that you do it? Or is it if you create it out for 12 months, you can edit the description for all 12 months, so it's a one and done, or are you doing it once a month?
What I'm doing is I'll bring it up and by my document number for the whole length of the time. So I'm not editing just for like the month of May. I'm looking out 12 months, 18 months. So I can just go and edit the description with just the copy paste at one time.
I found that's the easiest way to do it. Some people use other ways to filter it down, but using the document number is the easiest way. I agree with you, Pamela. Great. Anything else anyone else does? Um, I find I learn a lot from you guys with the things that you guys end up doing every month. Okay, perfect. And then year-end close is essentially the same thing, right? Um, I don't want you guys to um, think of them as two separate processes, which is why I have it here. They're really the same because when you get to the year end, your fiscal year, you're going to do the same things. There's going to be a couple additional items that you do, and we'll talk about those in a minute. But you're going to be doing the same, essentially the same thing. You still got to close your periods, but you just have one or two extra things you have to do, and we'll talk about why you have to do it. Oh, this as we talked about, is some internal monthly tasks that I've heard from people in the past. We have that payroll there. We have jobs. If you have jobs, closing those jobs so they can get WIP in properly. I talked about the geotags before we start discussing it, but one other one is bank statements. Now, when we talk about bank statements in the past, it's always been, once a month you go and you write your piece of paper and you check off what transactions um, occurred. Well, nowadays it's not the case, right? And with the volume of transactions we have, you don't want to wait until the end of the month, right? You can do it weekly, you can do it um, every other day, okay? But what I've heard from users like you all is that you may want to post that bank rec at the end of the month because you want to essentially exactly what it is, right? That statement amount and all that good stuff. I prefer doing your bank rec on a weekly minimum kind of deal. to help save you time. Those tasks that once you get proficient at it, you can give it to someone that's necessarily not your controller of your organization, but someone who has the capacity to do these other tasks that aren't necessarily value add, right? Because banks, but especially with the bank reconciliation, the transaction already happened. So we're not selling something, we're not correcting transactions, we're not screwing up our financials. We're just trying to record that this transaction did occur on our bank statement. So with that being said, having someone else do it who has a capacity, so that way you guys can all do things that are more value add is helpful. Does anybody else have anything to add to that? Or any feelings about doing bank rec timing wise? When do you do it?
Well, with the extra functionality provided to the bank rec with the auto matching and I can't remember, I don't do bank recs. I have a staff member that does them, but there's additional functionality that's been added that they go very quickly, that I wouldn't say there's a value of doing it once a week. I guess for me, the value would be doing it once a week is understanding if something's missing and being able to go back and find it, which is done pretty quickly at the end of the month, but we know throughout the month, is getting that activity approved and processed so that it can hit the bank rec. And for us, most times that is related to an ACH draw out of our account that hasn't gone through and been approved in Xflow for whatever reason. So that's really where our hang up is in the bank rec process.
Yes, yes. So with the bank rec process that you're talking about, I've seen people have these odd and end transactions that they have to spend time tracking down. And my goal is always to get it done before the end of the month. So with that being said, with the 1 month in process, so the end of the month, right? What happens is we have these transactions sometimes that linger. So the bank rec doesn't get done until a month or 2 months later, and now we're all out of whack. So that's why for me, I like to try to get people in a cadence for a weekly process, so that way we save ourselves from if there's something that we're having trouble with, we have the rest of that month to get it situated, kind of deal. Kind of not putting off what we can do today, essentially. And to your point, Pam, especially with Copilot and auto matching feature, it does help. However, there's companies that are out here that, and I don't know if anyone else has this problem, they cannot use the auto match because the descriptions are such the same that it causes it to not know what to do because everything's a deposit. So that's one thing I've run into with auto matching. So luckily, BC, like the example is like they have donations. So we have donations and then we have multiple, hey, $50, $50, $50, and they all go across. My argument's always, doesn't really matter as long as you reconcile, but there's people who want to make sure they're right ones and correct it, so they have to go one by one. It's a pain in the butt. So there's still some things for it to grow for the bank rec portion of things. I don't know if that made any sense to everybody.
I can see that because if you have the same dollar amount and you don't have enough description to identify it, if you're supposed to have 10 of those 50 transactions and you only have 9, how do you know which is the one that's missing? So I can see where they need to have description enough for auto to be able to make that connection, and you may not get that in your bank activity.
Yes, exactly. But with this one right here, verify we invoice everything. This is a big one for me. I don't know how you guys feel about it. When we're invoicing and doing things, we want to make sure they do it the right period. I have seen quite frequently people try to invoice something that's way older, and it just causes confusion, right? That's the biggest thing I see, because it's like, okay, now that this transaction has happened 2 months ago, it's going to impact my financials. When do I want to impact my financials? So you get into this discussion of, okay, should it be here? Should it be there kind of deal? And that's when you have those pain points of frustration of, hey, my financials changed when this decision making, what happened? Why did this happen? Having to drill down and seeing things. So just those little, I call it death by paper cuts, right? Those little pain points that happen. You want to clear those up, and the month end process is where you clean that up. That's where you're able to make sure everything's trued up so you don't have. Okay, so ultimately what we're doing for a month end process, right? We're posting all our activity, we're reconciling accounts, and we're running reports, right? That's essentially what we're doing. So I don't know if everyone's uncomfortable with talking, but does everyone in general, just so I can get the room or the virtual room, does everyone know their base Business Central month-end process, close process? If you don't, speak up, please, because I do not want to lose anybody.
I have a month-end checklist that I follow, but I am not sure that it covers everything that Business Central has available to make it as efficient as possible.
Okay. So let's talk about it a little bit. Let me get an environment. Let's discuss just real quickly. Let me get a quick description of what, and I have this document and I can absolutely send it to everybody. I can just pull up the document. I can absolutely send this document out to you guys. I want to use this instead so we can save time. Can you see? You can see my document, right? My PDF.
Yes.
Perfect. On here, right? Again, it's his month and year end procedures, right? So we have all these things that Business Central says you can do. We'll go to year end a little bit later, okay? But just month end process, right? It's based on what you have. For example, we have run jobs. Well, if we don't have jobs, we don't need to do that, right? Or production, right? And then you have other things. We also have inventory. If you don't have inventory, you don't address cost. We recommend you still address cost, even if you're FIFO, because things sometimes get stuck. But you have things on here, but you also don't have things on here like intercost, right? We don't list that because that shouldn't be traditionally a month in process. However, there's some organizations or like some time periods where a month is crazy, right? We need to adjust our costs. Example will be during COVID, right? Costs were jumping all over the place. So if you're a standard cost organization, that you need to double check your costing because freight and all that stuff was making a huge, and availability was making a huge difference in the way things cost. You might have adjusted your every month. Things like that aren't on here. But this document has traditional month end stuff. The first thing we always do is we close up your period. Okay. So we have a posting from and to is organizational wide. Okay. We normally have this during the month that we want people to post. But when you have here, you have your live posting from and to. This is where you're generically going to lock down everybody in the system, okay? You want to have it the month you're posting. So for example, we're going into June, you would have June 1st to June 30th, right? Because you don't want people posting transactions while you're doing your month-end activities to the previous month. But then when you go and update, you want to go for our user setup. What the user setup is going to tell me, hey, everyone has these posting dates except for my accounting team. Who's on my accounting team members? So here, I'll say, I want my accounting team members to be able to post from May 1st to June 30th, right? So I will put, if you want Breon to do that, you say Breon and you put my time frame. So that way, I'm able to do my monthly closing transactions if I need to be adjustments for the current month and so on and so forth without allowing everyone else to do it. So these are for our exceptions. Does that make sense? If you had a thumbs up on here, that'd be awesome.
Yes, I do use that, and I use it multifunctionally as well, for people outside of the finance department, because production needs a couple extra days to get all of their production things that are done. Yet I want to block sales as of the first of the month. So I block her, because if she posts anything afterwards, it's going to throw off the data that I use for Avalara for calculating paying tax. And I'm always open to telling somebody, if I have you closed out, that doesn't mean that I won't reopen for you. It just means someone in the finance team has to do rerun another report. So if somebody needs to do something that's going to affect accounts payable or accounts receivable, it isn't that we're not allowing it to happen. We just need to know so that we can rerun our agings or whatever correlated reports that are impacted. So I use it both directions to either let somebody not go into a future period or allow somebody to go back into a prior period, depending on what their needs are.
Sam, that's a great point, because a lot of you made like some great points. So one of the things is the ISVs. For example, if you have InsightWorks, for example, they use this page for handguns, right? So you may need to do this regardless of if it's just for financial periods. You might have to come in here and update things for your warehouse people to be able to use their stuff, right? But then you also have, biggest thing is I want to know there's a change that's going to be made to a previous period, right? Because if there's something, I might be X number of steps down to my month-end closing transactions, and you did something that's impacted something. I now have to run a report again. So making us aware that it's going, this is why this is so important and to use. So everyone should be using this, in my opinion, because it allows you to have a little bit more control and insight. So if something were to change, you just know what changed. That's kind of great. Also, I don't have it circled here, but I think this is important to talk about right now. Is if you see my cursor, I'm going around the sales invoice posting policy and purchase invoice posting policy. If you're in BC, I know some people may have NAV still, but if you're in BC, this will allow you to block posting invoices or posting shipments, right? You're only allowed to post one or the other, right? So, for example, this purchase invoices, I'm allowed. That means when I go to post when I post in the purchase order, it gives me the option to post receipt, invoice, or both. But if I have this as restricted, it will only let me receive it, and that's it. So this gives you a little bit more control there. And then if you have warehouse implemented, you can have the warehousing, so you can't do it that way. You have to be a warehouse employee. So it gives you multifaceted protection of what people can do. So that's just something I just want to point out. You guys getting a little bit of bonus data from the conference, because I did not talk about that before. So then you're running your periods, right? So you have your accounts payable reconciliation, and you also have your accounts receivable, the next page. Right here, right? There are going to be the identical processes where you're going to run your aging, you're going to review your aging, and you're going to make sure it ties to your GL. That's super, super important. They have to tie. What I mean by that is if my subledger says people owe me $100,000, but my GL tells me people owe me $120,000, which one's right? And if the GL is correct, who owes me that different $20,000? Right, so we need to be able to know that Pam and Pamela both owe me $50,000, and I have it recorded to know who I need to go after. Does that make sense?
So if you have it so that they're restricted, that you can't do a entry to the GL account of accounts payable or accounts receivable, that should eliminate any manual errors. But I have found, and I'm not sure if it's a manual error that's causing it or a human error, but we have a company that deals in foreign currency, and There have been at least 2 times where in a cash posting against a foreign currency, it did an entry to the accounts payable account in that cash application and an offset into the GL account, accounts payable, and that is not identified on a vendor card anywhere. So sometimes if you're just looking for manual errors won't just happen in a journal entry. Or if it's a system error, you may not know, like this one yet, if it's a system error or a manual error, but you can at least identify what it is and then work with your IT person, which I have not provided that information to her yet, and she's on this call. So the ball is still in my court, but there will be reasons why you could be out of balance, but you still have to identify it so that it gets addressed.
Yes, and with that being said, too, we have to. Well, that's my cue to say let's double check our setups too to make sure things are flowing to the proper place. We might have foreign exchange in this account, but it's not hitting AP, so on and so forth. That can cause us pain, right? And we don't want that. So, good point, down. We definitely need to review all those things and make sure that everyone's involved, so that way it doesn't keep happening, because that's gonna be a pain in the butt finding those. So you're kind of jumping to my next couple of slides after this, so that's perfect. But yes, identifying errors can be one of the biggest pains in the butt that I've seen from working with end users. So if I keep scrolling down, the same process happens to inventory reconciliation, right? We run adjust costs, regardless if it's standard costs or if it's FIFO, we're going to run adjust costs. That way, things that might have got stuck are going to get cleared out. And if we post it to our GL, it's going to make sure everything in our GL ties to our inventory, right? So we're going to run that. And you see that in this example, I have it running wide open. I'm not running it for a specific item. I'm running it wide open. That being said, when you do this process, it's going to give you pain points if a lot of people are in the system. So you do this outside of time of working hours. Also, this is a big caveat here. This option is only available if automatic cost posting is check marked and inventory set up. If it's not, function will need to be ran next, right? Because you need to post it, right? So this is that section here. And then you run your report.
That,
yes,
that process may already be identified and done by your IT team. So if you're not doing it as a finance person or scheduling it by a finance person, know that your IT team most likely is handling that already on some kind of automated schedule.
Yeah, what we normally do. Go ahead. Someone's going to say something? Oh, sorry. So what we normally do based off of the volume is, because when you do an automatic cost posting, it can slow your transactions down as things come in. It slows people down. So what we sometimes do is we have this automatic cost posting time frame to never, and then we have this run on a job queue every night. So that way, people do transactions, it doesn't slow them down, but it still does adjustments at night, every night. So that way things are still getting adjusted for their costs. So to Pam's point, the IT normally handles that portion of things, and it allows for people to be efficient with their workday without having that pain of stopping, slow downs, all that stuff. And this is what it said when you don't, it's posting the inventory GL account if you don't have that set up there, and it's going to run that process. And I'm just running through this quickly because I don't want to completely take all the time for this unless we had questions. So that's why I'm running through it quickly. But if you got specific questions, please say something. You also have the inventory to GL reconcile. Running this report, there's two different reports. There's inventory to GL, inventory evaluation, there's inventory to GL reconcile. I like this report better because it gives you not just what the total inventory is, it tells you where things are. For example, in this type, it says, okay, we have this total valuation, and where things are, we have this much that's shipped not invoiced. We have this much that's the expected cost, so that could change, right? And we have things that are received not invoiced. We don't have anything there, so everything's received in the system. We just sold some things that haven't been invoiced yet. So you'll see your expected cost things adjust based off of, hey, we said it cost us $100, but really it cost us $110 because of freight kind of deal, things of that nature. So you'll see your what builds that inventory valuation and what stage of things are in. So this is the proper report to run. And it tells you just a little description. Again, I can send this to everyone. Full amount should match the amount to inventory GL account. Received not invoice should match your accrual interim account. Your ship not invoice should also match your other interim account. And your total expected cost should match your inventory interim GL account. Any questions on this? This is a mouthful, and we can spend a lot of time looking at this and showing examples, but does anyone have a question about this? And this is running all our reports that I've talked about before. And now we have inventory periods. Who in this, does everyone use inventory periods? Do people not use inventory periods? Or do we have people that don't even know what that is?
So we use them, and I found out something very recently that's been impacting us on the production side in particular, but now also on the sales side. I used to close the inventory period about the 4th to the 6th day, just before I was ready to run we were ready to run inventory reports. And what I found out recently is it should really be closed on the first day or at the end of the day, or as close to that as possible, so that it closes, has a barrier, so that if there is something that happened in a prior period, such as rounding errors that are trailing from a prior period, it will force the rounding adjustment into the new period.
The current period, yes.
Yeah, and that's on the sales side that I just found out recently. And another thing, if we talk about restricting a salesperson and saying they can only go into the current period, the new month, and not letting them go back. How I started doing that and why was there was a sales shipment that was from the previous month. And because we didn't have the customer's PO at the time of shipment, we weren't going to invoice it until after we got the PO. We knew we were going to get it. It wasn't a concern, but we didn't want to post it without it. Well, if you don't restrict that, it will post it back in the previous month, because that's when the posting date was set when the shipment happened. But if it's not going to be posting or really actually invoicing until the new month, you want to know that instead of having it going back retro into the previous month. So dates are important. But this also affects the production side when they want to do something from a previous month. If the month is closed, but the inventory is closed, they're going to get stuck. And some of those messages that BC gives us that says you can't do something aren't ones that have been updated that are intuitive what you need to do or what needs to be done so that you can move to the next step.
So Pam, that was a good stuff. I want to really quick explain inventory periods in general, high level, and then kind of go into some of the stuff you're talking about. So inventory periods, the biggest thing I see the impact is when we have expected cost versus actual cost. So for example, let's say you post a receipt of a shipment of widgets in January, but you don't get the invoice until late February, and you don't get the chance to post it until March. Okay, so now you have this expected cost of $100, but when the system has recorded that you got that invoice and actually was 110, the system is going to go back to the oldest open inventory period and make that adjustment. So if you have January still open, it's going to go all the way back to January and update it. Why is it a problem? Because you've already closed your inventory
right? So you've already closed your inventory, you've already had the cost, so now it's going to be a difference from what you originally closed. And granted, it also respects other dates and stuff, but just from a high level perspective, that's what it's doing. By closing that period, it's going to go back to the oldest one. So if our oldest one is March, it's going to make that adjustment in March, not in January. Now, again, this also respects the posting date, right? It's not going to go past the posting date, but it's going to go back as far as it can go to put that date there. To Pam's point, she brought up another good example of rounding. You don't hear much about that being an issue, but that rounding can cause you problems. That point. So this all sums back to one of the first things I said: post all sales and purchase activity in your month-end process. You especially want to start doing that beforehand, that you can, because of things like this. So Pam's example of it causing problems with production is very valid example, right? So if you close it in the beginning, that date, now any kind of rounding and adjustments there, it's going to happen in the current month, not affecting your financials as you're getting ready to close it. Does that make sense to everybody? Can I get a thumbs up? Do we have hands? Can you raise your hand if it makes sense to you? How about that? Perfect. Right, so inventory periods. Now, I have a love-hate relationship with inventory periods. Pam gave a perfect example of why they're important. The reason why I am not always the biggest fan of them isn't because of the functionality, right? Because a little bit, it gives you a little bit of headache sometimes and all that stuff. The big thing is people don't always do it. I can't tell you the countless amount of times someone has set up inventory periods, they're doing it. I've gone for a reimplementation or troubleshooting something, and that inventory periods have been open for the last year because the person who originally wanted to do it has left the company, someone else comes in, and the new person doesn't understand the importance of it, or they don't want to use it anymore. Right? So the inventory periods conversation, there's some consultants in our organization that will die on that hill. That is their thing. You have to do inventory periods. And for me, I want you to do inventory periods if you're actually going to use them. Because if you're not going to use them, it's going to give you another step that you're just missing, right? So that's just something that's important. You need to be able to, if you're going to set this up, make sure you do it right and consistently doing it. Does that make sense? And so here we're talking about if you have production, you have your WIP process, calculate your WIP. Pam, I'm sure you're doing this now in your process, right? You're looking at your WIP production balances to make sure things are tied, I'm assuming.
I am not. So this will be a good one for me to add to it and to validate it. Especially
and you see,
but especially one company that has a lot, one location has a lot of WIP orders. So it would give me peace of mind to know that what's in there and it does tie. I know the report ties when I'm doing my reconciliation with inventory, but it would be interesting to see what value this adds.
Yep. And you might be doing this. It sounds like you might be doing this process yourself in your own way, but it's just a report for you, so you can see what's in WIP and what you have there.
It's just running a report. Yes, we are running the report.
I don't have a screenshot of it, but I would say go ahead and look at this to make sure everything's tying together. Again, month-end processes are doing transactions and reviewing reports, right? That's what we're doing. So this is another, just to just make sure things are hitting WIP properly. This is where you can catch a lot of things that aren't set up properly as well. So it says right here, this needs to tie, this trial balance report needs to tie with this WIP report that you have here. And it gives a little bit more detail.
Yep, I'm tying to the report. I thought it was an extra one, like you were talking about regular inventory reconciliation report, where it told you exactly where things were and to that level. But this is This is just a
It
general
does
one.
get a little bit more. It does a little bit more. Does a little bit more to that, right? So it does a little bit of that. Probably not super detailed, but it does give you, okay, well, this is where it's in, well, this is where the stage is at, kind of thing. So try to
Okay.
run it and see if you like it. I don't have a screenshot. I thought I did. I'm sorry.
Nope, that's okay.
But again, and you guys will get this document, so don't worry about it.
Okay.
And then again, telling you every step of the way to run your trial balance to see what's going on. Right? If you have jobs, same concept as a production one, right? We're trying to calculate WIP. Here, but except for this, for jobs is actually running your WIP versus the other one, production already has run the WIP portion of it, so you're just reporting on it. With jobs, you're actually calculating your WIP. Here, so this is where you get your WIP calculation as well.
On that
And
one, I would say be careful, and make sure you understand who's doing it and when, because every time you rerun that job WIP, it takes all the lines that were from the previous run and backs them out and then re-adds them. So you can be adding 5 or 10,000 lines depending on how big and how long those jobs are open. And we had ones that were open for more than a year and were, $4 million. So that's an awful lot of activity. If you're a big company and you have that, you may want to choose to run them somewhat on a job basis if you're closing one first and then closing out, running it for all the remaining ones. So that one might have a little bit more discussion depending on how big those jobs are and what does it represent.
Yeah, Pam, you guys do jobs as well?
We just spun off a company that was using jobs, so I was not disappointed that I didn't have to do that process and reconciliation anymore.
I bet. Yeah, I bet. I didn't like doing it either, and I'm the person that helps implement it. Does anyone else do it other than Pam? Because she has some good point there that I don't even think about. I try to just do it.
Yeah, we use jobs, but we only
Have
have
you
a
found
handful.
Pam for this?
Yeah, we do this. Currently we only have a handful of them. So, and a lot of it, what we're doing is we're using it to track our costs related to grant money that we receive. So I only really run it periodically when we have to do reports for the grants and that.
Okay. Make sure that if it's something for your financials that kind of gets stuck, that you want to record properly, make sure you are running it so that way at least you have those things going. But
Yep.
I'm with you. Anyone else? And again, it's the same thing. You're posting it to your GL after you run it, right? So, and you're running the reports. So before we get into year end, does anyone have any question at month end, right? I went through it fast again, because I want to kind of go through a couple of things that you could run into that I've seen and ask you guys about issues that you've run into for your month end process. Again, so we can learn from each other and grow. But does anybody have any questions on the month end? Okay. So we'll
want to confirm, I'm just going to confirm you're going to send out this document, correct?
Yes.
Perfect.
Yes, I'll give it to Joy so she can send it out. Absolutely. So now I'm going to go back to that for the year-end process. But this session, I really want to have people talk about what issues, right? Because a lot of times we have people come and they're like, well, this all sounds good, but I have these problems. How do I fix them, right? So I'm going to try to give you some things that you can troubleshoot that I've seen common. Is about, I think, 3 different ones that I've run into. Then I want to open the floor for you guys to give me things that you run into. So the first one, my subledger and GL do not match. What's going to drive me crazy? The example I gave earlier was my AR and my my customers, what they owe me doesn't match. My subledger does not match my chart of accounts AR account, right? So the first thing you need to make sure of, and this is Pam spoke about this, is this direct posting field will be on a lot of times for people, is what I found. You have to turn this off. Rule of thumb, If it's in a posting group, turn it off. Are there exceptions? Yes. 90% of the time there shouldn't be. If it's in a posting group, this should be off. It should not be turned on. And turned on means green like this. Okay. Okay, you say, okay, Brian, that's great. Thank you for that rule of thumb. I'm a little late for that. What can I do? Great question, Pam. So when you do that, you'll see some cues that will help you. If you go to your GL, right, for example, this AR account, you'll see things like your source code, right? This may be a transaction that has a problem. Now, this might be hit the GL account and not hit a customer. Now, I know this one did because it's tied to a sales invoice here, but understand that this is a queue, right? If it's blank or if it says GL, it may not have gone through a customer. But to quickly go through these things, you will add on your general ledger entries, you want to filter system created entry equals no. If it's not created by the system, it's probably someone put it in there, and this is where you start your research. So for me, I'm coming here, I'm reviewing this, I'm seeing a transaction, and I'm going to my find entries to ensure there's a document to it, and if not, what was the official journal transaction. This will help you expedite looking for it. In the past, if you're in NAV, what we have to do is I had to go back each month, run the AR and the trial balance to see what last month it didn't match. And then I would have to trickle down the transactions, and it was a pain in the butt because we didn't have the system created entry field. We did have that column where the source code was blank or it was general journal, but that doesn't always mean something, and you'll be poking in the blindly, right? So it was a little pain point. By having the system created entries here, you're able to sort down to see what are the entries that someone actually did, not the system. The system traditionally wants to match everything. To Pam's point, foreign currency is their own beast that you have to be careful with. And you may have some rounding errors there because of the currencies, right? And we just have to verify that the setups are done properly so you don't have that conflict there. Does that make sense? There's a lot of words there to say just check the system credit entries, but I had to give you the why.
Well, this is helping me work smarter, not harder, because I'm looking for non-system generated transactions, but did not know I had this option.
Yes, it's very helpful. And this is a BC thing, not a NAV thing. If you're a NAV, please upgrade so that way we can help you a little bit easier, give you some of these newer tools. But this again will make you work smarter, not harder. Right. Issue number 2. Oh crap! I posted a debit versus a credit. Right. So how do I know that? If we go to a page called a GL registers, you can go back and you can review the transaction. You can see, hey, what did I post, right? This is the kind of say, did I post the wrong one? Did I post the right one kind of deal? You can go to your registers, go to the last one you posted. So for my example, this is me, this is my user. I can see, oh, let me go and review this by going to run the GL register for transaction 856. And I can see what was the debits and the credits for that transaction from a reporting perspective. But if you want to see it before it happens, again, Brian, that's great. How do I do it beforehand? If you go into each GL account, you have this reconciliation account here, right? And what this does is it allows for you to see before you post what are the impacts. Now, granted, every account that you put on there is going to show up when you try to run this, but it'll let you see the impact beforehand. The biggest place you see it right here is on your general journal under my home. If I click reconcile, it's going to show me these are the impacts. It'll show me the balance after posting. For example, petty cash was not impacted in this transaction, but because of the reconciliation account, it showed up anyway. So this has no impact here, my prepaid rent was a debit, and my business account was a credit. These are my afterwards.
I guess I teach a best practice before you're going to do a post any kind of an entry, a journal entry, or even if you're in sales or you're in accounts payable, is to do the view pre-posting. And see what your journal account looks like. Regardless if that is on, because like you said, you get a lot of noise if you have ones on that you're not wanting to look in the transaction that you're reviewing.
Yes. Without a doubt. Pamela, did you have a question?
No, I
Or
do
something
not.
to add?
Nope.
Okay, perfect. I like to see you guys not on mute. I'm like, hey, okay, she has something to say. So, to Pam, to your point, the reason I like this is because yes, some people go into that the process of doing the preview posting, which I recommend everyone does every time they do a GL journal transaction. I absolutely want you to run your test report or preview post.
Brianna, I say this is, I've been doing this for, let's say, more than 25 years. I don't want to quite date myself, but more than 25 years. I've been the top finance person for as long. And nobody knows the mistakes we make at the top because we're the only ones that catch them. So by doing that extra step of looking at the preview is my validation of my own work and teaching good best practices to my team and people in other departments so that we can catch an error before it posts versus waiting until, geez, why did this happen? So even though I've been doing it this long and I'm supposed to be the expert, I still make mistakes.
Pam, I could tell you, I do implementations constantly, and I do stuff to show people how to do things. I preview post every time, right? It's something that's just important to me, unless I'm trying to just build an example quickly, and I still have a habit of trying to hover over that button before just posting it. It's a good practice. Where I see this coming to play is for newer people or people who don't live in this world constantly and they're doing a journal entry, to have them look at it, because sometimes the preview posting can be a little overwhelming. Now, I'm trying to understand what you're looking at. So you can see this is just a lot cleaner. So you can say, okay, this is the account, this is the impact, and this is the balance after that. That's the balance I want it to be. Who am I going to post it, right? But for sure, preview post, preview post, preview post. If I have nothing else, if you learn nothing else from this, it's always preview post. So my issue number 3, we talked about this one a lot, the inventory evaluation. I'm not going to beat the dead horse, but make sure you're closing your inventory periods so that way you won't have those problems. And this is what I was talking about, your cost actual and cost posted GL. You will have a cost expected until you get that invoice. So if you get that invoice later, as my example I gave earlier, this cost posted GL is going to post in that period that you not necessarily want to. And if it's happening, you need to go ahead and post adjust cost entries on a daily routine, so that way you aren't having that problem of things posting in the wrong period. And again, I'm skipping over this a little bit because we've already talked about this, but this is the job queue that people are running. Okay, so real quick, I'm going to jump back in here. I know I'm running tight on time. I'm going to talk really quick about month and year-end close. So my year-end close essentially is you create your year, right? Then I'm going through it fast because we only have 2 minutes. You create your you create your new fiscal year, right? You create your fiscal inventory period as well. If you have any base calendars for production, you're going to create those and the time frames and shop calendars. I'm going to skip all of this stuff.
I just want to add one thing when you're talking about setting up new time frames. You set up the current year that you're working in. I give myself the benefit of the doubt of adding at least 1 to 3 periods into the next following year, because as we get to the end of the year, we're so overwhelmed with all the activities that we need to do. The last thing we want somebody to say is, I don't have a period set up so that I can open it, or there's a problem because I can't post. So I always give myself 1 to 3 month bumper into the next year, having them set up.
Now, one thing I will say, you can post in a period that's not existing. It will not error on you. If your
It will
posting
not.
dates are there, it will not error. It will just let you keep going. Where the problem happens is now, let's say for 2025, I have not created a year. So we've gone, it's May, right? We're going all the way through the year. And now I'm ready to close my period and like, I never even created 2025, right? That's when you kind of like, oh, well, now you got to create a year for these transactions so you can close it, because it won't close because you have nothing to close, right? So that's one thing that I will say there. So you have that close year. In BC, it's a continuous year, a continuous close. So you don't have, if you close a year, you can always go back and post in that time period. It's just a matter of reclosing your income statement every time you do something like that. We still try to protect ourselves by using the date so people don't put in the previous year. The biggest thing I see from me is when a new year comes, I still get in the habit of putting the previous year, right? Writing it down, whatever. So making sure you have your periods set up and that your dates are closed is a protection for you. So otherwise, you will have someone post them to the previous year and you have to correct those. And then you close your income statement process with a couple buttons of you telling it where to post it. So it's just a journal entry. The way we know something is closed is on the posting date, it has a C in front of it. So what BC does is it gives you an extra date between January and December 31st and January 1st. So that way, it's a 13 period. That way you have your closing entries there. So why do I go all that? So my next one is I'm getting an error trying to close my year, right? So you have this right here. New fiscal year must equal to yes in the accounting period. Starting date current is no, right? You get this because you haven't even created a year yet, but you try to close it, right? So you want to make sure you have this new fiscal year for everything that you have. Pam, you already hit on this issue. You jumped the gun. I think you read my slides already because you already knew what I was talking about. But yes, this is some things people run into. So make sure you create that that accounting period previously, so that way you can continue to do your job and you won't get stuck. We end up having to, for somebody, we had to, one of my coworkers, I asked them about just different things, and they got in a weird situation where they had to actually export and force it via Rapid Start because they created a year and then created a year around it. So there was one missing year in the middle, and it wouldn't let her create that missing year. So you got to be careful when you're doing it. Make sure you're just doing it on in your year-end cadence. The accounting period thing you created, the accounting period thing you created, and it's automatically going to give you the oldest one that's not open created. So just get in the cadence of doing that. Don't retype it. Kind of let the system generate it, let you know what's going on. A couple other things before I let you go. I'm sorry I'm running a little bit long, guys. I want to respect your time, so I apologize. Your bank rec is not consistently completed. That gives you issues. Dimensions blocked. If you're in BC, there's a dimension correction screen where you can go and correct these things that are happening. If it's basically a SQL query, it looks for the transactions based off a filter, and you can make your changes. And then you also report. If you're using financial reports or in NAV, we call it account schedules. Your report totals are signed. You need to check to make sure that you've included all the accounts. A lot of times what you'll end up seeing is someone has created a new GL account and it's not in your financial report or your account schedule. So now your totals are off. Does it make sense? I know I rushed through the last couple of slides because I'm over in time, but again, I didn't want to, I want to give you the content. Do you guys have any questions or any other things that you guys ran into?
No, the only other thing that I say I use a whole bunch at month end is the reviewing entries in my chart of accounts when I bring that up. And there's certain accounts that I know are always troublesome for me. So I use that a lot where I can mark them as reviewed so I don't have to look at them again.
Oh, that's good. That's
I'm
good.
not
I've never heard that
familiar.
before.
I'm not familiar with that. Can you bring that up?
I don't have an environment open right this second.
Oh.
And that's why I
When
kind of
you,
ran through that slide. So.
yeah, when you go into your chart of accounts under your GL entries, up on the top, there'll be one that says review entries. And you can select like a date period or whatever, and you can just mark off after you've reviewed them. But you
So
have
I'm-
to make sure on your GL card that you have the GL marked as a review. There's a review policy.
I'm pulling
Let
one
me
up
go
right
back
now.
to this second. I might have one on the slide.
Got it. I can see that now.
Yep,
Thank
if
you.
it's for that review policy, I have almost all my accounts set to allow review because I'd rather have it turned on by default than if I want it than not. But then when you bring the stuff up, it's a real slick thing.
Thank you all for joining. And if there's any other questions, let us know.